Bloomberg Audio Studios. Podcasts, radio, news.
Joining us now, Meredith Whitney here for too short a conversation this morning. Meredith, I want to go with all of the acclaim of what you and I did years ago. The golden goose that keeps delivering for finance companies. All my radar's up on private equity, private credit. I'm hearing the same phrases you and I heard in 2006. Am I off the mark?
It reminds me more of 1994, 1996, to the extent that you see so much specialized demand for consumer loan products, duration consumer loan products. Mm-hmm. So when the securitization market expanded from mortgage to, this is in the 90s, the democratization of credit, they called it, into auto loans, into home equity. Home equity was a very new product in terms of, it had been around a lot with household and beneficial, but in terms of the expansion, it went from 0 to 60 really quickly. And you're seeing, home equity has exploded over the past year. And that is after a 17-year contraction. Private credit, it cannot get enough supply to meet its demand.
Let's come back with Meredith Whitney. Thrilled she's with us for this good conversation this morning to get the markets open here. Huge up moves in the markets 2 hours ago. Still up right now, but it's not going to be the enthusiasm of 7 a.m. As well. Right now, the Dow up 38 points on first print. We'll look to the NASDAQ to settle out here in the last couple minutes. Sai, help me here with Intel. What's the symbol right now?
INTC.
Nice. Did I nail that? Okay.
You're all over it.
I'm just nervous. Meredith's here, and it's up 25%, 31 is Meredith Whitney with us this morning. You have a paragraph in here which, I think a lot of people aren't aware of. Seniors own nearly this is classic Meredith. Yep. Seniors own 60% of all homes. They have 79% own their homes. 76% of those homeowners have 3/4 of the seniors have no mortgages. They're the golden goose for consumers. How do you play it?
They're the golden goose for consumer lenders.
Yep. Excuse me.
Sorry. How you play it is SoFi's been a rocket ship. Yep. Rocket Mortgage has been a rocket ship. Sorry for the the pun. But here's what's interesting. ICE Mortgage Monitor came out and said that 70% of cash out refinances were at higher rates than people had on their first mortgages, so they could access cash. So seniors are taking out first mortgages. That 76% of seniors with no mortgage, I expect to go down. And they're taking out all these products that are catering to seniors. Interest, it's a real estate interest only product for seniors that exists in the UK, retirement interest only, that exists only in the UK, that's coming to the US. All of these lenders, and I think a lot of these companies are private, that will soon be going public, because a lot of these companies are funded by private equity and their loans are funded by private credit.
Meredith, you talk to investors all over the world. What are they asking you most about these days?
I think they're asking what the next shoe to drop in terms of credit is, and the two things. There's incredible interest over the government getting out of Fannie Freddie, when that will happen, what that will look like, and what structure will happen, and then what's going on with student debt, and then also what's going on with home equity and private credit. Because one thing, one of the biggest thesis that we've had has been on names like Rocket and SoFi because of this originate and sell model, to a certain extent Upstart and others. What else are they asking?
Is Fannie and Freddie, talk to us about that, because that could be a monster deal for A, Wall Street, for B, the U.S. government, C, I guess, homeowners.
It will be a monster deal for the U.S. government. So in the vein of how the U.S. government was great after this Intel deal, how the U.S. government looked great after the Mountain Pass MP materials deal, how the administration will look great after Fannie Freddie. It is a no-brainer for Fannie Freddie.
I got to get this in. You did a PG at Lawrenceville. You show up at Brown to get a history degree, and then you said to me, you must have been like 24 years old. Hey, stupid, buy Visa. Who's the new Meredith Whitney Visa, up 23% per year?
I mean, this year it's been Rocket and SoFi.
Yeah, but for the next 5 years, 10 years, who's the new Visa? Or just buy more Visa?
That's a tough one because Visa was effectively like a demutualization. So there are very few, remember Prudential was like all those insurance companies were demutualization. Yeah. It's hard to have an exact fit. That's a moment in time. Visa and MasterCard to the same extent.
Right.
But it's hard for me to go out. I look at names like, there was a name that is not in my sector, Axon, which is the original taser company that has been just an unbelievable name. And you think about police enforcement. I think that's just maybe an Axon.
Yeah, Meredith Whitney with this. Let me squeeze this in. I want you to stay over for one more section with this as well. Meredith, you're on Park Avenue, the new rebuilt Park Avenue. James Diamond's Fortress Diamond, Citadel's above a fancy restaurant. The Waldorf's reopened. What's the symbolism for New York of Park Avenue's redo?
I think it's incredible, but those are long-term projects. Those are long-lived projects. The symbol to me, I'm mixed. Look, I've loved New York. New York has given me an incredible opportunity. It's really exciting to look at those. It seems like a vestige from the past, however.
We continue with Meredith Whitney, just iconic on Wall Street, forever for me with OPCO, but with many others. And she retired for a cup of coffee or something like that.
You can do that.
She's in Washington now. We say good morning, 99.1 FM, Nathan Hager Radio in Washington. What is it like being financial person in Washington? Is there any legit financial literacy down there, or are they just worried about what the Cook Political Report said this morning?
I think they're certainly at the Treasury. They're very smart people. At the Commerce Department, there's some very smart people. At the different, everybody has a vested interest outside of politics to be inside of politics. So it's almost like everybody's on, getting something out of somewhere. So there's, they're pundits all over the place. It's nerdy, to be sure, but it's not like there's only one New York, and there's nothing that compares to being in financials in New York.
Okay. Within the deregulation milieu that Mr. Trump has invented, do you look at it as continuing, or is it just simply a one-off to whatever the outcome of the next election?
Here's what I hear inside the Beltway, which is the departments that have been incredibly successful. So the Treasury has gotten a tremendous amount done so far. Trump is throwing more their way. So whatever they've accomplished, they're doing more. So the Genius Act was effectively written before Trump came into office. Yep. So a lot of the stuff they're putting out was already done. So now they're working on new things. So people are not sleeping and are trying to get this agenda passed as quickly as there's a lot to do in terms of deregulation. Michelle Bowman has still not come out with her new guidelines. So that's something in terms of supervision. So that's something we're waiting on, and that's going to be a big deal for the banks.
That's where I wanted to go. When President Trump was elected the second time, one of the calls on Wall Street was buy the banks, because this administration is really going to be pulled back as much as they can some of the regulatory yoke from the great financial crisis. So my question to you is that happening? Do you think it's going to happen? Is that a real thing?
Well, I can just tell you, PNC that made an acquisition a couple of weeks ago said that Demcheck spoke last week, I believe, and said that he doesn't expect any big bank mergers to happen, but they will have capital relief. And buying the banks, it has all been a financial engineering play. So they bought back stock, they've increased their dividend. It's not really sexy stuff. What is happening that is very sexy is the IPO pipeline is wide open. And I don't think that's going to change. So I don't know how long it takes for Bowman to come out with new supervisory guidelines. She's already told the market what she's planning on doing.
Right.
The 3/4 of the banks, or 2/3 of the banks, had unsatisfactory ratings on the banks, so they couldn't do anything. So lifting those, and a lot of those ratings were subjective, management governance. Lifting those should put a lot in terms of consolidation in the banks. Outside of the bank systems, like the traditional banks, have done better. So my pure play monolines have done better than the banks, even Citi that's up a bunch this year. Yep. But the underwriting pipeline shouldn't be underestimated.
The heart of the matter, good morning, Jillian Tett, writing at the FT a zillion years ago, gave me the phrase CDO squared. I'm hearing the same language now. I got so angry at someone the other day, I started doing a tranche analysis on air, which is like major folks pod. It's like sort of complicated. But are we reliving 05, 06, where we're reliving securitized jargon that's going to lead us to upset down the road?
I don't see it. I don't see it. Certainly not in the mortgage. I mean, the mortgage space has been dead for 2 years. So there's no debt market bigger. Sorry.
Oh, come on, asset-backed AI is coming, right?
right. I don't see it because also I don't expect the housing market to improve anytime soon. So outside of whatever they're going to do with government bond, I mean, I don't think you're going to have a, 10 years.
Okay, well, Lisa, can we blow up the interview? Okay, here, I saw a bar chart yesterday. I'm upset. 2/3 of the nation is flat on their back. Then there's like New York and Milwaukee's doing well. And right at the bottom of the chart, U2 is Summit, New Jersey. I mean, Summit, New Jersey is killing it right now. You're telling me housing prices in Summit, New Jersey are at risk?
Oh, I don't know that. I'm saying deal activity is the lowest it's been in over 25 years. Housing prices are staying high because there's so little activity. Yep. And the high end that can get qualified for mortgages or pay cash, that's where the transactions are happening. Paul?
Summit never goes down, bro.
Or the beach.
Got the train. The beach never, Spring Lake never goes down. Forget it. I picked two of the most expensive places in the world to live. Great.
But it's worked out.
Yeah, it's worked out
It's the
fine.
big bucks on Wall Street, right?
Yeah, it used to be big bucks. So you mentioned Citi, one of the many banks I used to work at. Arguably the greatest trade of my life is the day I left Citi. I sold everything, literally, before I got out the door, which was a great trade. Stock's up 45% this year. Has Jane Fraser found the secret sauce to finally turn Citigroup around, do you think?
Okay, let's take that into context. So what banks have done incredibly well? The European banks have done unbelievably well. A lot of that is because of the infrastructure and investment plans, and there's going to be a huge revival in those stocks. But they were all trading below book, and they were all trading below tangible book. And so it's a reversion to the mean, and things weren't getting worse. And so the reason why the stock is up is because it was the cheapest going into the year. I'm not taking anything away from the execution, but there's a lot to do. And
is it still too big of a bank, too sprawling of a bank? They kind of do everything for everybody everywhere. That's kind of been one of the critiques. And I think Jane Fraser's trying to get some focus there, but
it just takes a long time to move a ship. But the fact of what she had in her she looks like she looks very good because of the stock performance is going to validate whether it's deserved or not. Her performance. It was just cheap going into the year.
You're at the Hay Adams Hotel where you have lunch 4 times a week. The Secretary of Treasury walks in. You're sitting with Mr. Bassett. What's your number one advice to him right now?
I think deal with Fannie Freddie. It's the fisticuffs fight between Pulte and Bassett, I think, is all over Fannie Freddie. So I think that's what the market's waiting for.
I can't give you my opinion. Right now. Let's go there then. I mean, this is really sensitive stuff, and we don't do rumor and speculation. Your whole career has been fact-based as well. He's going to prosecute, the privatization of these 2 great mortgage companies and push aside the pretenders? Is that what you're saying? Push aside... the pretenders? I
don't know that anyone gets pushed aside.
The political types?
I see what you mean. It's a knife fight down in D.C. And so it's I don't believe, it's a zero-sum game in politics. So whoever comes out ahead, we had a big day
yesterday with the Federal Reserve. We had their decision cutting 25 basis points. How do you think the Federal Reserve is kind of How do you think they're performing these days? Are they behind the curve, do you think, or are they kind of dealing with the data as it does come along?
Well, they're not saying the S word, right, which is stagflation, which it seems we're very, very close to. From a growth standpoint, it's hard, I hope I'm wrong, but it's hard to see. From an inflation standpoint, you don't see it in the hard numbers, but you see it in anecdotal. And I think what you do see is homeowners insurance. I think insurance costs are going to go up. So there are a couple of factors. Number one, auto insurance and homeowners insurance. Homeowners insurance has gone up close to 70% in the last 5 years, and that's been a real sticking point in terms of affordability for seniors, and that's why they're tapping into home equity. Auto insurance has also gone up tremendously.
Tell me about
it. So I think you're seeing sticky points. There's also things that happen in terms of the American Rescue Act, which subsidized healthcare premiums for everyone who's self-insured. 50+% of Americans who are self-insured. That ends at the end of the year. So healthcare premiums will spike at the end of the year. So I think the Fed's got to be really careful. I mean, they probably did cut yesterday to save face and risk management because they'd get in trouble if they didn't. They'd be blamed if they didn't, but TBD.
Meredith, in your coverage, what's most interesting to you these days? Is it the new fintech just broadly defined, or is there something else specifically you're looking at?
There are a lot of things that I think are interesting. I think that I always think that the consumer is incredibly interesting. The consumer had been bifurcated. I think the consumer gets even more segmented in terms of the strength. I think student debt, so the Department of Education is now going to start of August, it's going to start garnishing wages of up to 15% of salaries. That's going to put a sting. Serious delinquencies are over almost 11%, and that's rising quickly. So I think you're going to see I'm always the most interested in the consumer because the data is so granular. I think you're going to see different strains on the consumer. The very high end will continue. Your Summit in New Jersey, where I was born, is going to still spend robustly and carry the economy.
So, Meredith, we're going to have to leave it there. We've got news in England as well. Thank you so much.
Thank you guys
time.
so much. I'm such a fan.
If we come down to Washington, we get first guest. I mean, Secretary Treasury or Meredith Whitney, who do you take first? I mean, it's all there is to it. Meredith Whitney, thank you so much for being with some important perspective here on the ebbs and flows of our finance.